Welcome to episode 18 of the 5-Minute Investor Podcast. I'm Jonathan Brown from Stockhouse.com and the Market Online. Trevor Abes is off this week, so it is up to me to dive in with you into the performance of two major theater stocks as the cinema industry slowly recovers from the COVID-19 pandemic. Cineplex, which trades in the TSX under the symbol CGX, and AMC Entertainment, who lives on the New York Stock Exchange at the ticker AMC. Let's start with Cineplex, Canada's largest theater chain. Since the pandemic eased, Cineplex has shown solid signs of recovery. In Q4 2024, it posted 362 million Canadian in revenue, a 15% increase year over year. Earnings per share turned positive, and both box office and concession revenues per patron rose. Attendance is also stabilizing, and Cineplex stock has climbed 36.5% since this time last year. Beyond movies, Cineplex is expanding into location-based entertainment and leveraging its Scene Plus loyalty program to drive more engagement. A recent refinancing move also aims to reduce debt pressure and potentially bring back dividends. Now let's look at AMC, the world's largest cinema chain and former meme stock darling. In Q3 2023, AMC reported its best quarterly earnings ever, thanks to its blockbuster hits like Barbie and Oppenheimer, or Barbenheimer as it became combined. Revenue exceeded $1.4 billion US, and the company aggressively cut costs by closing underperforming locations and renegotiating leases. However, AMC still faces $74 million US in deferred rent balance and a heavy debt load. Despite that, its leaner operations and improved cash flow do suggest a more sustainable future. AMC also posted a weak Q1 this year, but promises that the summer blockbuster season will help jolt a better Q2. Q2 brought a wave of high-profile films to theaters. Leading the charge was a Minecraft movie, which mined over $423 million US domestically, according to Box Office Mojo. Disney's live-action Lilo & Stitch followed closely with $404 million US, and Sinners, a gritty Warner Brothers thriller, pulled $278 million US. Other releases included How to Train Your Dragon, the reboot, at $213 million US. Marvel's Thunderbolts brought in $189 million US, and Mission Impossible: The Final Reckoning saw $187 million US. The top 10 films of Q2 2025 grossed a combined $1.9 billion. That's up 36% from Q2 2024's $1.4 billion, according to Screen Dollar's box office review. Cineplex offers a steady recovery play with diversification and improving fundamentals. Meanwhile, AMC is a higher risk, higher reward option with bold cost-cutting and strong brand momentum. The cinema industry isn't fully back, but it's on its way. As audiences return to the big screen, both Cineplex, which last traded around $11.50 a share Canadian, and AMC, which has been trading around $4 Canadian, are in a position to show some benefit. Now's the time for investors to just dig deeper, analyze the numbers, and watch the trends, and you can decide which story fits your portfolio best.
As always, you can find links to the articles from today's episode in the show notes, and you can find more investing insights on Stockhouse and the Market Online. The 5-Minute Investor is on Spotify, YouTube, iHeartRadio, Podbean, Stockhouse, or wherever finer podcasts are found. Thanks for listening, and we'll see you on Monday. The material provided in this podcast is for information only and should not be treated as investment advice. For full disclaimer information, please visit themarketonline.ca/disclaimer.